So, the China trade deal is done. Well, not really, but don't tell the stock market. Then the Fed, about to print money again. But please don't call it QE. Another oil tanker is targeted by missiles in the MidEast, and oil barely budges. But nothing to worry about here. So everything is awesome. And with everything being awesome, Bank of America came out today and stated, I quote, in our view, there's no reason SPX, which is the S&P, can't overshoot 33.33 next year, perhaps peaking around Super Tuesday on March 3rd, completing its extraordinary 11-year bull market from the lows of 666. So, let's take a look. And so today we're going to stick with this chart here, which is the 1-year daily on the spiders, the SPY. The close on Friday was 296.28, and boy, what a day it was today. Now, looking at the price chart, something that I've been watching for quite some time and wondering if you've seen what I've seen. But I've seen this from way back here. Now, if you remember in late 2018, early 2019, in my humble opinion, this downward move was somewhat of a self-fulfilling prophecy. So I've kind of etched that out of my memory. So if you etch that out and you look at the trend line, we got a pretty nice trend line going. So I'm not too surprised that we're bumping off here as well as what we did say back in August and maybe back there in May, June, the time frame there. So looking at then the MACD, you can see somewhat the same. It's not going to show up as well on the price chart, but you get the idea. And right now, the MACD, the fast line came down below zero, the slow line also below zero, with the MACD turning and heading on up. It's going to move through that slow line possibly sometime early next week. Look at the histogram, same thing, trend line up. Looking at the price rate of change, you probably could draw a trend line here as well. This one is mine, so it's not as straight, but you get the idea. Definitely fast line moving through the slow line, heading on up to zero. So things are improving. And things bounced off, say, here in early October and moving on up. So it's not a real big surprise. This was baked in even before today, if you were watching. Here, RSI, we're at a moderate 56.69, but definitely, again, you link those bottoms, you get an upward trend. So that's looking pretty good there, as well as on the stochastics. You can see the bottom there at 20, moving on up, certainly before Friday. So you did have an idea that things were improving. On down here to volume, not going to tell us much. And then, of course, into the Williams, definitely a bottom here, not unlike the bottom there. And this was a severe bottom, more significantly negative, but a bottom nonetheless. Moving back up here to the price chart. And what we see is that it bounced off. Actually, it got down to the 200 EMA. Very surprising, but it sliced right through the 20 and the 50 EMA. And although we did close near the low of the day, the fact that there's this gap here, and with all that news that I talked about, particularly the Fed's getting into the money printing business again, I think we're going to head up. And I think sometime next week or the week following, we'll probably hit a new high. So coming on Monday, I'm going to have more information on these charts here, which is the video is spurred by a question from LKZ. So please tune in to that video coming again on Monday. And for today, that's ChewDog Charts. Thank you.